Hey everyone, welcome to a brand new episode of Show Me the Crypto. On this week's episode, we chat with Matt Katz, who is the CEO and co-founder of Caldera. And this was a great conversation, Ulf. One of my favorite parts was right off the beginning, where we talk about the fact that Matt was 12 years old when he first discovered Bitcoin. And so he talks about his journey from that moment until founding Caldera. But what stood out for you in terms of highlights from this conversation?
Well, Matt was perusing hacking forums when he was about 12 years old, so that stood out. No, that was a very interesting piece of history, but just learning about his growth from a really young age into a talented programmer and software engineer, and through to his time at Stanford and then founding Caldera was all a very interesting story for me. But from that, also just better understanding what Caldera is. He got into a good explanation of rollups and layer 2 technologies. And then really, I think my favorite part was when we dug into the future of blockchain technology and how it will be used with gaming, and how gaming publishers and developers and these studios will likely utilize their own chains specifically for their games or to build out their platform of games, and where that could go in the future.
Yeah, this was a really, really interesting conversation. Matt does a great job of explaining this. Whether you're brand new to the space or you're very experienced, I think you'll get some value from this conversation.
Show me the crypto. Show me the crypto! Show me the crypto!
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Caldera CEO and co-founder Matt Katz. Matt is a self-proclaimed crypto OG without the net worth to show for it. Perhaps that has to do with the fact he discovered Bitcoin at the age of 12 while in middle school. Matt's interest in technology led him to study computer science at Stanford before he dropped out to co-found Caldera. Caldera is a rollup development platform that allows developers to launch high-performance, customizable, application-specific rollups. Matt, welcome to Show Me the Crypto.
Yeah, thanks, Wade. Ulf, great to be here.
So let's start there. At the discovery of Bitcoin, you're 12 years old. And I think I heard on another interview that you were asking your mom to help facilitate online money orders to Russia to try to buy Bitcoin at the time. So how did you eventually get your hands on Bitcoin? And what gave you the conviction at such a young age that this would be a worthwhile investment?
Yeah. This is, I think, I like to tell the story as much as possible. I'll get as much mileage out of it. I got into crypto very early. Around the age of 12 years old. At the time, Bitcoin Talk was the main forum for everyone to discuss these sorts of things. I wish I could say I had some unique technical insight. I just thought Bitcoin was really cool. Spent a lot of time as a kid on kind of gray hat, script kiddie hacking forums. Also was sort of going through a libertarian phase. And at the time, the forums were very, I would say explicitly kind of libertarian, anarcho-capitalist. And so all those things together, led to me just developing an interest in crypto. And, as a kid and even now, I could get very obsessive about things. So just spent a lot of time, trolling on the forums, looking at all the new developments that were happening. And so I think at the time I wanted to enter, Bitcoin was around $50. And that's when one of the biggest exchanges at the time was called BTCE. It was shut down by the feds maybe 5 years ago now. But it was Russian or Belarusian or something like that. Tried to convince my parents to send money into the exchange. Of course, they were like, "What are you doing? It's like seems illegal." And candidly, like the exchange was up to a lot of shady shit, so maybe it would have been. So wasn't able to enter at 50. Then there was like a bull run that was happening then. I believe this is like 2012, 2013-ish. And so I was able to enter when the first Bitcoin ATM opened up in my city. Was at like a coffee shop, went down to it, took out all the money I had in the bank, saved up, which was like a little under 1,000 Canadian dollars, put it in, received like 0.9 Bitcoin out at around a price of like around $1,000. That bull run was felt kind of crazy at the time. Spent a lot of time checking the price, and then ended up losing my entire Bitcoin in Mt. Gox. So that was my first like full cycle crypto experience. And then I think it served me well to prep me for like the whole FTX saga that happened a couple of years ago. But that's basically how that all transpired.
And maybe career-wise and just, getting to where you are today as a developer and the founder of a, very technology-driven platform. You've obviously been into this since a young age on these hacking forums at the age of 12. Has tech always been an interest for you? Like at what age growing up did you really start to get into all things tech and have that be so captivating for your life?
Yeah. Been an interest. I decided to become like a software engineer at the age of 5. My mom was an engineer, so she encouraged me to do it. My dad was a lawyer. I remember coming back from kindergarten one day. I told my dad I wanted to become a lawyer. He sat me down. He told me, absolutely forbade me from becoming a lawyer. He said it was like a miserable existence. So at that time, I then switched my interest to software engineering. And thankfully I had, both my mom and also my uncle, were engineers. So they were, kind of able to encourage me and help me. I didn't really start in earnest until like late middle school, early high school in terms of like actual coding. But by that time, it was like basically all I spent my time on. Did a lot of just like full stack development, hackathons, that sort of things, kind of adjacent to crypto. Spent some time working on now highly kind of defunct or at least out of the spotlight crypto networks, things like Stellar and Neo, which was like a Chinese blockchain formerly called AntShares in like the 2017, 2018 bull market. That, all that kind of developer activity led me to studying CS at Stanford, where I kind of really rekindled my interest for crypto and distributed systems. This was, my first year was 2019. Got really involved with a bunch of folks building really cool things in the Ethereum ecosystem. And then, a couple of years later, decided to found Caldera.
Looping back to the Mt. Gox situation, I mean, that would be hard as a young person to have all of your savings, which you put into Bitcoin, then be lost in an exchange. Was it difficult? Like, did you have a sour taste in your mouth after that and almost like that you stepped away from the crypto space for a little while? Or did you still have that conviction and it wasn't too long being frustrated about it?
Oh yeah, I definitely I rage quit the space. I did the same thing in 2018. And so the nice thing about that was I was able to get that out of my system. So the last, when we founded the company, Caldera was founded in 2022, 1 month before Terra and 7 months before FTX. And so it was, it helped kind of build the resilience for when those things happen. Cause I had been through it before, but yeah, definitely the first couple times I was I swore off crypto. And it took me years to come back to it.
Speaking of your time at Stanford, what would you say is the biggest lesson or value that you took away from that leading into founding and being the CEO of Caldera?
Yeah, I'll mention 2 things. One is that I think being in university as a self-taught programmer gives you a lot of appreciation for the deeper kind of academic side of building software and writing code. A lot of, I think, self-taught devs, you kind of feel like you know it all. You spend a lot of time building cool apps, etc. But it was at Stanford where I really developed a lot of intuition and love for the deeper aspects of computer science, like distributed systems, operating systems, cryptography, etc. And of course, the intersection of all of those things is building cool, innovative things in blockchain. So that was very helpful. As well, I think Stanford, one of the unique things about it, people talk about the entrepreneurial culture, which is definitely there. But a lot of it is just seeing that other people who you think you're about as smart as or even smarter than, like being able to start companies and raise money, et cetera. You have a really strong kind of permission structure to like go off and do it. And so that was like definitely like the most valuable thing. Prior to starting this company, I interned at a bunch of companies, including Stanford founded startups as well. So all of the investors that are pre-seed were, investors for companies I had worked at in the past. And so just developing those connections as well was super helpful.
We're going to get into Caldera specifically in a second, but before that, we mentioned this before we hit the record button, but we really like to cater our shows to those who are new to the crypto space with unintimidating content. So with that in mind, really basic question here to get started, but what are rollups and why are they necessary?
Yeah, great question. I would say, so there are people in the space who definitely take a much stricter view on what a rollup is. I will avoid doing that, partially for simplicity and partially because I just find those types of people quite annoying. But like, basically a rollup or an L2 is a blockchain that is like outsourcing some of the functions of the blockchain, namely like security and to some extent like decentralization to another blockchain. And so this whole idea basically originated in the Ethereum space. And an Ethereum L2, think Optimism, Arbitrum, there's a bunch now. They are effectively standalone blockchains. They have like a very tightly connected bridge to the chain they're settling on, Ethereum, and they're relying on Ethereum for their security. So you can kind of think about it as like applying sort of like the cloud model to blockchains, where instead of needing to bootstrap an entire network of nodes yourself, it's just a blockchain that relies on some other blockchain's network.
And that ties into Caldera and what Caldera provides. But can you tell us the backstory of Caldera itself and explain what Caldera is and what purpose it serves?
Yeah, so Caldera is the easiest way for people to create L2s. Basically, we've gotten it down to the point where you can press a button in one click, you have your chain. We also work closely with teams that want a lot of customizations. So maybe, it's a few clicks. I want Celestia DA. I want, this security property. I want data, I want this number of nodes. I want people to be able to validate the chain in this way. Basically, it's just like a cloud platform, like an Amazon Web Services or similar. Press a bunch of buttons, click another button, and then you have your own chain on either Ethereum testnet or Ethereum mainnet. The reason we started working on this, so we started in the gaming space, basically building this exact idea, but like only for games. I was like really active with some folks who are building like a lot of the early experiments in like the on-chain gaming space. I was also doing some kind of early things around like on-chain social, think like trying to put like subreddits entirely on-chain. And so being in, those spaces and working with people who I felt were really pushing the boundaries of like consumer mass market applications on crypto, it just felt super necessary for them to give them like basically as much cheap block space as they could consume. Because otherwise just a lot of these ideas wouldn't work. So we started with that premise. Very quickly, we learned that people want to launch blockchains for all sorts of reasons. So I won't say that every single blockchain we work with is like super high throughput, maximum scale, super cheap, super fast. A lot of people want to launch a blockchain to like monetize their community or turn an existing protocol into more of a platform, that sort of thing. So we've slowly kind of extended our mandate over time. But the core idea has always been there, like give developers more freedom to just like launch their chains how they want it.
And how's it been so far? I mean, so you launched this service where people can build their own blockchains very easily. How many people are using Caldera at this point in time?
Yeah, so we've got 65 plus signed, like I would say, like legitimate, venture-backed teams using the product. About 20 of those are on mainnet. So we're currently running 20 chains, all L2s or L3s on top of Ethereum. The chains, they all have different characteristics. Some are, very, mass market, very successful. Others are smaller, more experimental. In total, we have about $500 million in TVL at like current day prices. At peak, it was about 2 billion. We have had, about over 2 million unique users interact with at least one of our chains. We processed about 125 million transactions. And, things aren't really slowing down. A lot of people, are saying kind of the modular narrative is like getting a little bit more quiet, but like we're seeing a ton of activity from a lot of teams that are looking to like launch their own chains. So yeah, things have been quite good so far. We've got a lot of like very cool launches in the pipeline.
What is the Metalayer and how does it work?
Yeah, so we have kind of I think the funny thing about crypto is that you solve problems, and then in solving problems you like create more problems, and that's like definitely true. In this like L2 modular space, where like we've kind of now effectively scaled Ethereum with this like hodgepodge of L2s and making it really easy to like launch more. Like now, for all intents and purposes, like there is kind of infinite capacity for blocks. People have issues with me saying infinite, but like there is a very, very large capacity for us to have more block space that at least settles to Ethereum in the form of L2s and then L3s. The issue with that is that a lot of these L2s are effectively now completely independent blockchains. They're all like unified by that connection to Ethereum. You of course could use Ethereum as the intermediary between these chains, but as we all know, that will get slow, that will get expensive. That's not the most ideal way for these things to work. And so looking at that kind of fragmentation, we kind of came to the realization, well, we're sort of part of the problem now. Let's be part of the solution. And so the Metalayer is effectively sort of like a chain abstraction and interop layer across all the chains that we're launching. And so what that means in practice is like, we want to make it really easy for you to transfer a token from chain A, a token, to chain B, to chain C, and then withdraw that back to Ethereum, in one step rather than needing to kind of like trace your way backwards. We also want to make it easier for developers to build basically natively multi-chain, omni-chain apps and infrastructure. It's a huge problem right now. All these infra providers, all these dApps, they now need to adapt to a world where there are like going to be hundreds or thousands of chains, and they need to make their applications work for that. The Metalayer is basically going to provide interfaces to allow developers to accomplish that task in a way that's like 10x or 100x better than what they currently need to do, which is like effectively isolated deployments for every different chain.
What sort of technical challenges do you run into creating something like the Metalayer?
Yeah, we've been like really strongly opinionated that the Metalayer itself should not be strongly opinionated. So we work with the top 4 rollup stacks: Optimism, Arbitrum, ZK Sync, and the Polygon CDK. It's almost certain that as more stacks emerge and as more technologies emerge on our platform business, we're going to integrate with them. And so the Metalayer, from day one, it really needed to be compatible with basically like any sort of current rollup and any sort of future rollup. And so like we're seeing, I think in this space, a lot of people trying to build walled gardens, which makes a lot of sense from those, the perspective of those businesses, right? Like let's say the Optimism Superchain, which I have a lot of respect for and I think makes a lot of sense with their business model. But like all those solutions are at best partial solutions that solve like 20% of the fragmentation issues. Nothing in crypto, it's very, very hard to kind of coalesce around like a single standard, especially a single standard being built by effectively like a for-profit company. And so we're trying to make our design as unopinionated as possible and making it easy to integrate with like every single rollup stack. And so there's like a ton of technical challenges that come with trying to do that.
How is Caldera different from other projects that are trying to solve and focus on blockchain scalability?
Yeah, it's a massive category. We have always taken the sort of like modular approach. So, we feel like horizontal scalability rather than vertical scalability is the way to go. That means instead of trying to build one single really fast blockchain, which inevitably always gets saturated or, has issues or, forces users to take on some risk. We've always taken the position of like developer choice and allowing developers to kind of launch their own chain, choose where, where on those sort of trade-off spectrums they want to lie. So versus like the huge, vast landscape of like blockchain scalability solutions, which presumably includes like Solana, Avalanche, et cetera. Like that's where we sit, and that's our differentiation. I would say against some of our closer competitors, we have always been like relentlessly, user focused. We have done our best not to be too opinionated or prescriptive about what people should do, what people shouldn't do. Of course, when it comes to security, we will be, but we've always tried to kind of skate where the puck is going, really understand the market, and like build things that users and developers actually want. And I think in a lot of industries that wouldn't be a huge differentiator, but like what we're told time and time again is like, I think, our solution is oftentimes the only one that people can use to actually accomplish like all the goals they want to accomplish. And so just having that like library of customizations and, options for folks has been a massive differentiator.
Appreciate the Canadian reference with the skate to the puck is going. Good job on that. But also, I'm curious about the timing of this, right? So you launched this just before Terra, you mentioned, and FTX, but it was in a bear market. How important do you think that timing will be? Because you've been around the space a long time. You've seen projects that have come around in bull markets, projects that have come around in bear markets, and sometimes the ones that emerge in bull markets, it's tough to exist through that next bear market and to make it through. So do you think that was important? Was that on purpose at all? Can you talk through that?
Yeah, definitely not on purpose. We've always just gotten lucky with timing. We raised our first round right before Terra. We like signed our term sheet a day before our second round, a day before FTX blew up. Our Series A was substantially closed like before the most recent market dump. So I've always gotten lucky with timing, and I wish that I could say there was some unique insight we had, but the truth is there wasn't. I think like in our view though, we've always been a little early, which I think is where to be. So we founded the company in 2022. We kind of built throughout that year. At the time, there is basically no market. We tried really hard to sell this to a bunch of people. People were interested, but no one, was willing to commit. I think we got our first customer December of that year. So it was about 8 months. And then, a few months after that, let's say like April or May of 2023, things really started to pick up. And so I think like, now that we have more adoption, we have a lot more projects building on us. We found that like it's pretty sticky, right? Like if you're building your app or your game around the idea that you're going to have your own chain, like you're probably not going to move away from that when the market changes. It might change your launch timelines, but it won't change your like fundamental, the plan for the business. And so we haven't really found like the number of customers, the number of users really fluctuating too much with price. So we're cautious, but we're cautiously optimistic that basically this model of like launching your own chain, creating L2s and using that to power your application, because it just fundamentally solves a lot of problems for developers. Like I don't think it's super tied to market cycles.
And what are some of those key problems that it solves? I sort of want to tie this into like, what are actual examples of projects that utilize Caldera, and why would a project want to launch their own chain versus all the other options available to them? Because it's hard for me, for example, as someone who's never gone through that process, to understand what those key benefits and perhaps the drawbacks are in making that decision.
Yeah, it comes down to a combination of three things, like performance, customization, and value capture. Some teams and a lot of teams that are building more consumer-facing products, like those teams, they just want raw performance. They want the cheapest transactions, the most block space. They also want like some amount of consistency around pricing, which is really important. We've seen this in the past where like blockchain starts out cheap and then it just gets more expensive over time as the blockchain gets popular. So for a lot of teams building things like games, like that's the primary motivator, and it's just like a pure numbers question, like trying to minimize the cost of using the blockchain. Most of our other customers, it's a little more nuanced. Some are very interested in customizations. Some examples of this are like, enforcing royalties for NFT trades at the chain level, enforcing KYC at the chain level for like real world asset and like regulated applications, those types of things. Like with those things, you're able to basically bake in unique differentiation at the sort of like chain/product level. And a lot of teams are very interested in that. And we work with a bunch that are like really trying out like kind of like new novel structures there to like kind of push the limits of what blockchains can do. The third thing, and I think a lot of people are a little shy to talk about this, but it's definitely a factor, is just value capture, right? When you are launching your own chain, you're basically turning your protocol into a platform. You're encouraging other people to develop on top of it. You're encouraging third-party applications to integrate with it. And you're able to make money from fees, like from all that user activity. And so for a lot of teams, it actually feels a lot cleaner to do that and then basically just have a small take rate on all the activity that's going on in their ecosystem than trying to launch their app on a blockchain they don't control, they don't own, they don't know how much support they're going to get. And also where they're generating a lot of fees that's like, going to someone else or someone else's node, and they need to like graft on some additional kind of monetization feature on top. Typically, like for most teams, it's like a combination of these three things. But really we've seen like a really wide spectrum. And again, for us, like we initially had really strong theses. Some ended up being right, some ended up being wrong. We now try to, come to these conversations with an open mind and just, for whatever reason someone wants to launch a chain, we're there to help them.
Matt, I want to circle back to something that you mentioned a little bit earlier, and you were talking about initially how the approach was kind of specifically on-chain gaming and on-chain social. And I'm curious just your opinion on this of where do you think the mass adoption piece is going to be, where we really see more people getting into the space? It seems like it's been this collective goal for those who have been interested in blockchain tech of how are we going to get the masses on chain? Where do you see that happening? Do you think it's going to be gaming? Do you think it's going to be social? What's your prediction?
Yeah, I'm still incredibly bullish on gaming. I think if you look fundamentally from first principles of like what blockchains enable, I think blockchains are going to, there's just like a lot of nice synergies with how games currently work, microtransactions, marketplaces, basically every purchasable in-game item in a game like League of Legends or CSGO is like effectively an NFT. So like there are like, I think a lot of parallels between the two in ways that crypto can actually make games and building games and monetizing games more efficient. So that's where my bet would be in terms of mass market adoption. On the more kind of institutional or like real world side, also very bullish on things like stablecoin finance, remittances, eventually potentially putting certain types of securities on chain, or at least giving people access to securities on chain. I think that'll, take a little bit longer. But yeah, I mean, the reason why we pivoted away from a pure focus on gaming is that we found that focus wasn't actually leading us to build a better product. We're building, basically really generic tools for launching chains. And also gaming, unfortunately, it's just a totally different type of market and different type, totally different type of company to sell into. Typically really long sales cycles, oftentimes a little bit more bureaucratic, just because gaming teams oftentimes need to be really big in order to, achieve their goals. And so that caused us to pivot away a little bit from that industry. But I'm still extremely bullish in the long run on games. And like, it's something we keep a really close on because we think like, 10 years from now, like the majority of the block space that we're going to be providing will be to games.
That makes sense. And it's a smart pivot. I'm curious, and you maybe sort of answered this already, but why do you think it's taking so long? Because I remember we launched this podcast about 4 years ago. And at the time, we were having these conversations, interviews in early 2021, of people kind of opening our minds to the possibility of like everything you're saying, like, wow, this does make sense. Why wouldn't an in-game item be an NFT? And then people could actually have real value from that. It always seems like it makes a lot of sense. However, it's been slow to get there. And do you think that's resistance from the gaming community? Like if you had to give it kind of a timeline horizon, how long do you think it's realistically going to take for us to get there?
Yeah. I spent a little bit of time working in the gaming industry. I won't proclaim to be an expert. I think part of it was that if you look at a lot of the games being created last cycle and, just in crypto broadly, I think they're either very separate from like the games industry. Like there are crypto people who are trying to make a quick buck by launching a game. I respect it. It's capitalism, but it's like, that's not necessarily the recipe for like building a super successful like game that lasts for a long time. And a lot of those games are mostly, you can probably classify them as like crypto economic experiments, right? Where everyone was making money until they weren't, and then things kind of shut down. And then on the other side, you had, I think, people that were a little bit too kind of triple A. There's like a lot of activity on the investment side, looking for people who are like ex Blizzard or like ex Riot creating games. And I think a lot of those people, they didn't really understand crypto. I'm not even entirely sure if they fully understood like games and like gamers, and the ways that they think. And I think from those things, like gamers felt that whenever NFTs were being pushed in a game or whenever crypto was being pushed in a game, it was 99 times out of 100 like a cash grab, or it didn't fully make sense, or they felt like they couldn't really trust the developers. And like so I do think like crypto has been given a bit of a bad rap in that community. What will likely happen, or at least the sort of bull case for crypto, I think, in the gaming industry, is that I think we've come to the point actually where crypto does fundamentally just make the process of creating a new game with all these mechanics like easier, right? Like if you wanted to create, let's say Steam or like the Steam marketplace today, I guess, for context, for those in the audience who might not know, right? Like Steam basically has like an NFT marketplace by another name in their app, and they've had it for at least 15 years, I would say, where people can like trade skins and in-game items and that sort of thing. Like if you wanted to recreate that today, like how would you, like what's the fastest way to do it? It's probably to launch a chain on Caldera, go to one of these NFT marketplace as a service companies, then go to like Third Web and use their off-the-shelf NFT contracts to like launch deploy NFTs and connect that to your backend, and then like convince one like fiat on-ramp provider, and that's something like we've helped teams with, to like allow people to like on and off-ramp USD via credit card onto that chain. And you could do that all in like a week, and then suddenly you have like a secure marketplace that people can pay in fiat onto and exchange their items, etc. Like, and because it's all using the standard like EVM stack and interfaces, like other people can develop on top of it. So you suddenly now have like a developer platform. Now, like, will Steam ever do this? Like, no, they're the incumbent. But like, if you were to try to found a company that competes with these other companies, like crypto is actually a really good way to, lower your development times and also like create a more compelling product. And so that's the bull case, I think, for why this will happen eventually. But it will take people who are, very inspired and are really ambitious and like are actually trying to take down the biggest incumbents in the space. So it will take some time, but I think we'll get there.
Just while we're digging into this subject, I mean, I find it fascinating and talking about approaches and maybe some of these challenges. I mean, technology, obviously, like where we are in the crypto and blockchain space, there have been many hurdles, which has probably been part of the problem as well in the gaming space. But when we talk about, those reasons for why you would launch your own chain, when I think about it for the gaming sector, hypothetically, do you think it will be mostly publishers? Like who is that the ideal audience for to come up with your own gaming blockchain? The reason I say a publisher is, for example, Wade and I actually have an interview coming up with Sony, who just announced their own blockchain officially that I don't know what their plans are with it and what they're going to be doing. But, I think about the ecosystem you're talking about. And if you're Sony or any other gaming publisher, you could then have all your other studios who are developing for you, all the games you're publishing. This is far future, but anything that's integrated on the blockchain could be on your chain, and that's also a way that then the publisher makes fees off of these games. So it seems like the use case makes sense when you go, it can make a lot of sense for gamers and actually like owning their assets and things like that, but it can also make a whole lot of business case sense for whether it's the game studios or publishers or whoever to be making other sources of revenue as well. So what are your thoughts around that and how that setup would work? And am I going down the right track, or do you see it differently?
Yeah, I think you're totally going down the right track. One of the biggest use cases for launching a chain is to create a platform. So if you're a publisher, there's like a super clear platform play here. And, you can tie it, if you're Sony, into your existing Web 2 platforms. And like, then you already have a super compelling pitch to go to other teams and say, hey, launch your game on this blockchain. Now, if there are games that are trying to become platforms of their own, or they just require like massive scale, which a lot of them will, they might need to launch a blockchain themselves. The nice thing about L2s and, the concept rollups, you can just stack them. So maybe you'll have a Sony L2, and then, all of the biggest games will have an L3 or potentially multiple different L3s that they're like, just sort of like how games can have multiple different servers per geographic region, et cetera. And so like, it's kind of an all of the above answer, but I think you're totally on the right track and like how this will look like 5 to 10 years from now.
Another thing you mentioned earlier in the interview is that you had some involvement with blockchains that maybe have lost a little bit of the popularity, things like Stellar, Neo. What did you learn from that, from kind of working on chains that maybe slipped away from the user numbers that they once had? And where do you kind of think the future's going? Do you think primarily we're talking about Ethereum here, where the vast majority of this is going to be built?
Yeah. So I would say I learned slightly different things from Stellar and Neo. Stellar was probably the most formative, where at the time, so like call it 2017-ish, it wasn't super clear that Ethereum's thesis of like providing like Turing complete, aka you can literally build anything right in smart contracts. Like it wasn't super clear that like that was the correct approach, just because nothing had really been built yet. People were building like NFTs like didn't exist, or they like barely existed. People built tokens, fungible tokens, and then there was like an order book exchange called Ether Delta where everyone traded cryptos. And so Stellar basically just built those two things into a blockchain. And because they built it in, it was a lot faster, right? So there's like a single method that's just like create this token. And then there's like an on-chain DEX that's natively built into the chain. And so working with that, if you looked at where the space was at the time, like that was the kind of correct approach, and that, made sense. But I think like the thing that you learn from seeing, how Ethereum and Stellar basically, have been diverging in terms of popularity since then, is that giving people more choice and more freedom and like allowing for emergent behavior is really, really important in blockchains. And I think that's what Ethereum had done well. And people don't really, internalize that it probably took, close to half a decade, I think, for like really interesting things to be built on Ethereum. And so for us, and for myself personally, like the lesson there is, again, just like give people freedom and choice and try to maximize that. And then like you'll be able to capture a lot of the like most interesting applications and the things that like will be important for the business in the future. Neo, I think, was they actually did take that approach. Like they were a smart contract platform. They I think supported many different languages, or at least like had some sort of compatibility step where you could like write code in Python and stuff. So it was a very interesting chain. I think a little bit of that was just like go to market and adoption and building ecosystems. And so, in crypto, the stronger your ecosystem, like, or the stronger ecosystems you can tap into, like if you're Ethereum compatible, like our chains are, you can tap into like the Ethereum developer ecosystem. Like that is so much more powerful than trying to like reinvent the wheel. And so seeing a lot of those like those initial like alt L1s kind of rise and fall was, it definitely helped us kind of solidify our thesis going into like the past couple cycles.
At this moment in time, we're kind of in an interesting spot. Earlier in the year, we had a bit of run up in prices. There's been different speculation of, are we in a bull market? Where are things at? I mean, certainly it felt like that earlier this year. People feel as though we're perhaps on the brink of it taking off once again. Of course, these things are tough to predict, but what do you think will be a major trend to look out for the next time we kind of hit full bull market?
Yeah. Well, I'm glad you're not asking me to predict when the bull market will happen. I think this is an easier question than that. I think in crypto, it's always been hard to predict as well what the thing will be, right? Like NFTs were not really a thing until they were. Now it seems like prediction markets are very interesting. And like that's been, like Vitalik has been talking about prediction markets since like probably before he launched Ethereum mainnet. And like now they're finally coming to fruition. And so again, like the nice thing about our company is that we're just like an index on blockchain activity. So I don't need to think too hard about this. We can be more reactive, around what the killer apps will be. If I had to guess, I think that it seems like the space is leaning into like more financialization of things. I think at some point we're a little afraid of doing that. Like at the NFT gaming days, obviously there was a ton of financialization, but we're trying to come up with justifications as a space of like, it's not like, it's not all like tokens and selling them. There's like this veneer of something else on top, whether it's art or games, etc. I think now like there's like a renewed appreciation for like DeFi. There's renewed appreciation for like RWAs, which I think are very interesting. And I think just like putting more financial, things on chain is probably the most likely kind of like catalyst for the next bull run. And I think from, you speak to people and like as a business, as we like onboard even like more international contractors, et cetera, and like receive investments from people who are outside of the States, like, yeah, you do learn to really appreciate like stablecoin finance is amazing. It like just works. And like there are a lot of things that can be built on top of that. So I'm really bullish on that specifically as like, potentially the catalyst for the next bull run. But again, like you never know what's going to happen.
Matt, this has been a great conversation. Ulf and I like to end every episode of Show Me the Crypto with the same 3 questions we ask every single guest. It's a segment we call You Had Me at Crypto. Ulf is going to ask you those questions.
All right, Matt, you ready?
Yeah.
All right. The first question is, who is your favorite person to follow in the crypto space?
Oh, great question. It's really tough to come up with an answer that's not like, Vitalik or something.
Yeah.
I will say, I think, again, not an amazingly hot take, but I think they do deserve like a lot more love. I think the Arbitrum founders have become a lot more active on Twitter over the last year or so. A lot of hot takes. They're becoming a lot more opinionated about like the design of the chain. They're working on some really cool things. So I think like giving like Stephen Goldfeder a follow for folks who haven't yet will just like really help them understand like, at the technical and product level, like, how blockchains are evolving.
I love it. Good answer. Second question, what will the price of Bitcoin be 10 years from now?
Wow. See, like I'm such a dev, like I don't even know what the price is today. I need to look it up. Okay, it's like 57 US. 10 years from now, again, I really don't focus on price, especially not Bitcoin price. I don't know. 200 grand feels reasonable to me. But, extremely wide confidence bars on that. I could accept 2 mil.
If only 12-year-old yourself could hear that answer.
Yeah.
All right. Third and final question. What is the most underrated project in the crypto space?
Other than Caldera.
Yeah. Yeah. That is also really tough. I think so. I would say, if it's okay, I'll give like two answers here. One is like ZKVM projects. Again, like they are very hyped. I'm talking about things on the like level of like Succinct or like Nexus. They are, they're well funded. There's a lot of hype behind them. I just think that the potential for these projects to transform like the world, not just crypto, is extremely high. And so, like, if the space was actually allocating attention correctly, like we'd spend half of our time talking about these types of companies. They're trying to apply ZK to just like any sort of compute. And so that's like the what I feel is truly the most underrated project. There are also a few ones that we work with. Like, I'll actually say there's a chain called Sanko, which is sort of like a gaming sort of like meme chain. Like, it's not VC backed. They launched a token a while ago. They've just been like shipping like crazy and just like building new things on their chain. And there's like a great community. It's really crazy and, highly, memeable. And there's just like a bunch of stuff happening there. And I think like, the one thing the space, and I'm kind of in a glass house saying this, but one thing the space is missing is like small projects, not necessarily VC backed, doing interesting things. And this team like Sanko is really one of those. So everyone should check them out as well. So hopefully, those two answers are sufficient for this, but it's a really tough question.
They're great answers. Yeah, this was a great conversation. Matt, thank you so much for joining Alf and I on this episode of Show Me the Crypto.
Thank you.
Awesome. Thanks for having me.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.